Hi guys, and welcome to Symax Fintech Weekly Insight. First of all, our disclaimer. So obviously trading involves the potential risk of loss of capital and is not suitable for everyone. Hopefully it is for you. And many companies provide leverage, so you should be aware that you could lose substantially more than that initial investment that you make. The views, opinions, information contained in this is purely for educational purposes. We're not trying to encourage you to trade or invest. We're just trying to prepare you, help you. And of course, you should carefully consider your financial situation, definitely your level of experience, risk appetite. And of course, you should only risk capital that you're prepared, more importantly, can afford to lose. Any doubts whatsoever, then make sure you seek independent financial advice before you risk your capital. Okay, now that's out of the way. Let's have a look at last week. So obviously US data did not disappoint. NFP came in 315,000, slight beat from what was expected, but not by much. Employment dropped from 3.5 down to 3.7. The things that I look at more are the weekly hours, which again dropped slightly, 34.5 as opposed to 34.6. But earnings year on year up 5.2%. Manufacturing was stronger last week as well at 54. New orders 51.3 when the expectations were only 48.5. So, you know, the US economy is still looking really strong at the moment. The ISM prices paid dropped again, 52.5 from 55.5, which again is, you know, a benefit for the US. It's bringing down the base costs for companies, although are they passing that on to the consumers yet? In the UK, PMI was better than expected, 47.3. Just make a note that, you know, above 50 is growth, below 43 is contraction. So 47 is not great, but it could have been worse. Consumer credit was lower than expected, though. And then, of course, we move on to the EU. Inflation remains high, 9.1. Harmonised, it came in at 8.8. Core inflation's about 4.3%. So, you know, obviously power's having a big impact on that. Consumer confidence dropped again, negative 24.9. Retail sales lower by 0.5%. Consumer spending lower. PMI below 50, 49.6. And Germany seeing the highest inflation for almost 50 years. And then on top of that, we've got this situation with Italy, their economy under more pressure, which is driving yields higher. There's a lot of friction coming in around that with other EU members. You know, Germany, amongst others, it seems, increasingly against bailouts and helping countries that are getting into these troubles. And of course, Germans, you know, I read books when I first got into the financial markets many, many years ago, well, decades ago, actually. And the Germans fear inflation and a weak currency above all. And of course, at the moment, they're seeing both within the euro. Key data this week is obviously, you know, based around the fact we've got PMIs coming out, but just remember tomorrow's Labor Day. So that's in the US. So obviously, you know, we're not going to see much tomorrow. Plus, it's NFP Monday. You know, the day after NFP, it can be a little bit sluggish. Why analysts are assessing, you know, what the data actually represented on Friday afternoon and what it means going forward. Then on top of that, we've got ISM. We've got the beige book. And now I like the beige book. It comes out later in the evening. But what I like about the beige book is it gives you insight. It's not just based on pure data. It looks at, you know, there's a comment or not so much a speech, but sort of a good paragraph or so by each of the members of the Fed, you know, on how they see inflation or how they see the economy in general. So, you know, I like to read that. And you can always get that on their website, Federal Reserve's website. And also there's speeches by Powell and Mester, which again will definitely be worth listening to. In the UK, Monday, we've got the announcement of who the new Prime Minister will be out of Truss and Sunak. Hopefully it's Truss. It's just my personal opinion. We're also going to see this week PMI, house prices, is inflation, is interest rates starting to sort of frighten the buyers off for the moment, and the MPC report. In the EU, we've got ECB meeting this week, so expect some action. Let's see if they disappoint or whether they meet expectations. And I'm sure different people have got different views on that. And of course, there's PMI, retail sales, and GDP coming out as well. Just a little bit on some of Asia. So in Japan, GDP, China, CPI, and trade balance. And then ECB is not the only meeting this week for rates. We've also got Bank of Canada and Royal Bank of Australia as well making their rate decisions. Okay, so we're moving on to the macro outlook now. And of course, inflation is still the key word that everybody's looking at. And at the moment, it's not going away. It seems in certain countries as though it may have topped, including the US actually. But I fear that Europe, the UK, have got a lot more to come yet as these power prices really feed in and impact prices as the energy caps are moved higher. And is that going to lead to recessions? And for me, yes. The US may be the last in, but I just can't help but see them getting dragged into a recession as well. Their data is so strong at the moment. But going forward, once these rate hikes really sort of get into the system, into the economy, is it going to be as healthy as it is now? And of course, the central banks haven't finished with their rate increases yet. For me, it seems as though they're determined to actually force recessions. By forcing recessions, they can then regain control of inflation. So, for me, that personally, again, emphasis personally, that's what I believe they intend to do. Supply chain issues, they're easing, but they could return. And the reason for that is because China lockdowns are growing again in over 20 cities. I was reading earlier, they've even got drones flying over to make sure that people aren't going outside. The Russian invasion of Ukraine, 6 months on, Ukraine actually seemed to be advancing again in the south and recovering some of the ground taken. Again, I did read something about that where the nuclear reactor is, that there was some shells being fired around that area. So again, just watch that. Energy and food prices, the inflation's a bit mixed there. We've seen sort of oil prices coming down. But of course, the Russian gas is off again. So that's, how far can they come down before people sort of try and replace what they need in the way of gas with other energies such as oil. And food inflation, food's a little bit mixed. So the droughts over the summer have sort of caused a little bit more movement on the upside. But they did come all the way back down to sort of the pre-Russian invasion of Ukraine. So they're probably going to stay a little bit mixed for the rest of this year. Now, going back to power, Russian gas, yes, they've turned it off again. How long is it going to be off for? It's off for maintenance, but how long is maintenance going to last? Are they going to keep finding more problems and actually just starve Europe of gas? For me, this is Putin's way of sort of revenge for the fact of all the sanctions that have been put on him. And of course, it's us, the consumers, that are paying the price for that. Now, for me, the big question moving forward, especially in Europe, is will industry stay open? will they have the supplies of gas or energy, power to keep going? And is it affordable? Can they actually pay those prices? Is it getting to the point where they can't realistically pass those costs on to the public, to the consumer, because they just can't afford to pay it? So again, we're just going to have to wait and see, how this pans out. Uh, Unfortunately, Putin seems to have the last say, and I'm sure he's enjoying it as well. Lack of workers still seems to be around, which just amazes me, but it is. But that earnings pressures still remain because of that. So, companies that are looking to take on more staff are having to pay higher wages to get them. Tensions building within the EU member states, as I mentioned, and that's just based around Italy at the moment, but they're not going to be alone. This is going to impact every country in the EU and in the European area, full stop. Look at the UK as well. But, some countries are performing better than others, but um, even the stronger countries are coming under pressure. They're seeing inflation pressures. They're seeing, okay, they've got better earnings and all that, but it still is taking sort of a big chunk more than what they used to paying out for their energy costs. And are they going to get rises to compensate for that? Are the governments going to step in and come up with some solution to ease those burdens on families? Especially the lower middle incomes, because this could push them into energy poverty. Where they've got to make these hard decisions about, especially as we come towards winter, about keeping the family warm or keeping the family fed. It's a terrible position to be in. And a little bit just on crypto. The ETH merge is about to happen soon this month. There's mixed dates for it at the moment, but it's almost here. ETH has been sort of quite strong, performing better than Bitcoin. But let's wait and see, how strong it remains, and if it all goes smoothly, of course. And that's where they're going from proof of work to proof of stake, which is less energy intensive as well. It's been planned for a long, long time, but it seems now as though they're ready for it to actually be implemented. So fingers crossed it goes smooth.